What's going on, people? It's GBP baby. Welcome to part 2 of the episode I was just recording. I'm not going to explain everything. If you just go back to the episode before this of backtesting, I have a playlist of it. If you go back to the previous episode, you'll see that I annotated all of this. All we're doing is looking at entries on the week commencing. Was it the 20th? Week commencing the 12th of June. We're just looking at that price. Oh no, sorry. Week commencing the 19th of June. We're just looking at that price action. Yeah. So this is euro dollar, and we were just looking at this balanced price range. I was talking about it, how price left it. So I'm gonna just type in balanced price range, and yeah, hope you guys enjoy. You know the drill when it comes to these backtesting videos. Again, to be honest, me doing these is more so beneficial to me because I'm actually the one in the charts looking at this price action. But I do highly suggest you guys go and check this out yourselves, in all fairness. So is there an entry here? I mean, we could argue as soon as we leave this range. Let's see. You can see here we have a breaking market structure. Where's the breaking market structure? GBP baby. Breaking market structure is here. Why? Because we trade above a swing high and we close above it. And we create a fair value gap. And there's a bearish order block. And it's at a 50% level. And we then trade back into it. So this would be a beautiful entry, although a beautiful entry, I guess. And it's at the start of London close, and this is where time plays a big part. Like, look, as soon as London close starts, we trade down and then we move away. And obviously this is easier said than this is much easier seen than done live in the charts, but this is how we practice. And I'll put my stop loss below this low here. And I'm also going to write out why this is a good trade. Alexa, stop. Sorry guys, I'll be right back. Right, where were we? Yes, I'm going to quickly just type out why this is good. We've got a bullish order block. Traded. We traded below the range here previously. So we traded into an old low. Price closed above the 50% level off the trading range. Whilst taking out a swing high. Created a fair value gap. And price respected the 50% level of it. Here's the old bullish order block I was referring to here that left the range. You see, took out the sell side. So what we're going for now, buy side. That's what we have. So let's say we entered here, trade higher, higher, higher. Where's our first target? Well, our first target could be here. So I want to let off some of my position there, realistically, because let's be real. Let's be realistic. And then you can see we gap above. So this gap above through the Sunday opening, I anticipate price coming back to it and finding support, especially at the 50% level. So I anticipate that kind of move, which offers another beautiful entry. If we say traded below, if we traded through this gap and started trading back below it, I'd probably close my position at that point. But it's beautiful how price just respects these levels. So then you could argue that this so we got up, down, and then leave it. So this range now, could you argue that this is a balanced price range? I guess you could, right? Well, we know for sure that this part is. Why? Low, high, upside, downside, upside, downside, upside. I don't know how we should be viewing it really. I mean, if we look at this fair value gap, you can see that this has been traded on the upside and the downside and the upside and the downside within this range. Upside, then we gap away. So this fair value gap specifically is a balanced price range. So I'm gonna make that white. Balanced price range. I don't know what's happened to my music. I'll find out. There we go. So balanced price range and a fair value gap. And we'll slap that on top. See how we trade up through it, then down through it, then up through it, and then down through it, and then up. So we trade up, then down into this fair value gap, resting below it, whilst respecting this one gapped at the gapping at the Sunday opening. Remember, this is the Sunday opening price. And then we find respect inside. So once we find respect inside here, I guess that is us showing likelihood of going higher. We then create a fair value gap as we gap higher. Again, what we're gapping, where are these gaps forming? At the 50% level of the range. You can't make this up. No one can tell me that this is not algorithmic. This is craziness. These are all potential entries. This entry here, and here. This could all be stack entries. And then we gap above leaving the range. Fair value gap at the exit of the range. Put that inside. At this point, I mean, I guess we were trading into something much on a higher time frame. Where I'd close my position, well, above this high for one. So let's put a sell above this high. So the first candle that trades above it would be here. And then I'd probably leave a runner. If I was expecting higher prices, I'd leave a runner on. Cool. Because I don't really trade between these times anyway. So then we're moving into Thursday now. Same thing as always. We mark out the Asian range. High. Low. And very quickly, I am going to quickly take a screenshot of this because this is very interesting. and this is going to get shared in the Discord. Guys, make sure you go and join the Discord, because this is all beautiful price action. Oh, okay, right, so I'm going to quickly put my dividers in. Actually, yeah, I'll quickly put my dividers in. I'll be right back. So now we got the, again, London kill zone, New York kill zone, London close, and then Asia is over here somewhere. What day are we on? This is Thursday. So what do we go for first? You can see we go for the south side of Asia range, and we trade below this swing low as well. So this swing low anyway is a very nice piece of south side liquidity which you can anticipate price to trade to. So I'd see this as a what do you call it? What do you call it now? What is it called? A turtle soup. Once we take out that low, we can expect price. If we're expecting higher prices, that is. Again, it depends what we anticipate. On what we are. It depends on what we are anticipating. But you can see some beautiful entries right here. So we've got this order block, and we have a break in structure. Where's our first break in market structure? GBP baby, here. Once we trade above here, we have a break in market structure. Although, to be honest, I do like to see price close above the swing highs, like properly close, like a candle close like this, for example. Yeah, that's just what I prefer to see, really. And you can see we wick down into this fair value gap. But once this breaking market structure comes and so once we close above here and then we come back down, I'd say this will be a nice buy into this buy side liquidity resting here. Alright, so excuse me. So before we continue up here where we were, I did just want to come back here because if you remember previously, I think it was the previous video, I actively looked at the range between the end of London session and the start of New York session. And you can see how here we take out the south side of that range first, and then we run for the buy side. And then after we've taken out that buy side, you can see prices continue to run. Also, there's a fair value gap here that gets created at that swing high. Seeing gaps get created at highs, such as here, I see it as a very bullish symbol right there. So I'm also gonna taking that into account, I wanted to do that here as well. But before I do that, let's put in where I'd like to enter, which would be in this fair value gap. Although, like I said, I would rather see price have had closed above this swing high. So I'm going to say my entries here purely because I would wait for price to close above that level as opposed to just entering thinking it's going higher. So once this bullish order block once this entry comes here and I see support, you can see price trades higher. So I'd let go of my position here, unless of course I'm expecting higher prices, but let's assume I'm not. And also in regards to trading anyway, usually you just want to get in and get out, and this would be literally a 15-minute trade from here up to here. And then you can see how this order block, like we come down to it and we find support at it again. You can see we stack with 50% level gets respected, and it's all just the same thing over and 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 over again. Right, so we're just gonna make that red dash, you know, the drill. So here's another range that gets created. We have this low, and I want to say here's another range. I mean, here's me actively looking at the range between the end of London kill zone and the start of the London kill zone. And here we have a reversal though. You can see we run for that. As soon as New York opens, we take out that buy side liquidity resting here, and then we fail to take out this high here. Failure swing here. and then price aggressively breaks down, runs for the sell side, and then I'm also going to mark out the 50% level because I want to talk about this and how we actually trade back to that. Interestingly enough, what's the high of this? 10015, and the midpoint of the range was 13. You can't make this up, man. There we go. So you can see how we trade back to that. There's also a fair value gap and a bearish order block. So this would be a beautiful entry for a sell, and obviously I'd sell into this sell side liquidity here, and then I'd aim, which is, I would aim for down here as a potential sell, but I'd definitely let off. I'll probably let off most of my position under these lows here, and then leave some running. But I'm going to get into that in a sec. Let's just add my entry here, and you can see our price even respects this fair value gap here as well, showing a very bearish nature. We just about trade into it, wick up, and then down we go. We also trade into a breaker block at the same time. Why? Swing high, swing high. Where's the swing low? Here. So this is all confluence breaker. You can see how we wick into that 50% level of that, of course, and then we start to trade lower. So I'd get out of my position below this low. So pretty much as soon as this candle, what am I doing? As soon as this candle closes, well, not even closes, as soon as it takes out this low, I'd want to get out that position. We have a turtle sweep here, fair value gap. At a bullish turn, bearish order block. With a lot of selling weight behind it. That's one thing to consider in this condition. The fact that there's so much selling pressure. The fact that there's so much selling pressure behind this move. So we moved all the way down here, trade up, lower, 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 lower. So there's lots of selling pressure going on, meaning that as we've traded up to here, leaving no gap, no fair value gaps in this range. There's no fair value gaps. You can see how once we touch that, we then break off again and trade even lower. So this could be another potential entry in the London close, sorry. And again, do we see a balanced price range? Yes, we do. Where from? Here to this low. We traded down, up, down, and then we left. So once we traded back into that, look where we traded to. 50% off this balanced range. You can't make this up, guys. This is craziness. This is craziness. And it's to the pip this time. No, it's not. The high of this is 9890, and this is 95. So it's 5 pips below, but you see what I'm saying, and you see what I'm showing you here. This is very, very much algorithmic price action. I'm gonna make that white. I'm gonna send that to the back, and I'm gonna type in balanced price range. But it's interesting that I'm starting to recognize balanced price ranges. And it's interesting, yeah, it's interesting that I'm managing to find them. I guess if we went to here and then looked at the 50% level, would that make a difference? I mean, 8.6, and this is 8.90, 8.90, 8.6, yeah, no, right, cool. So I'm actually going to move this down because I want it to be, I don't really want the wicks involved. Wicks do the damage, candles tell the story, or the narrative, whatever you want to say. There we go. Stop loss above there, entry here, and then we can also, and then we'd exit either below this, well, we could exit below this low, and then we could leave a run around. And then again, we'll have another balanced price range. Where from? This low to this high. Why? Downside, upside, downside. Touched it, left it. Have we traded back into it since? No. But it's interesting that it's interesting that you can recognize these balanced price ranges. This is where we are literally today, now. We're currently filling in this range. It's going to take its time. Whether we're going to have lower prices, I don't know. We'll see how Monday trades completely, but we're not going to cross that bridge right now. And if you watch my Sunday review, you'll have all the information you need to know. But we are soon going to come to the end of this video. This is a bullish turn. Bearish OB. Let's put that inside. And then price kind of gets sloppy around here. Let's put the Asian range in real quick, 7 p.m. Now, here we go, Asian high, Asian low. And because we were so bearish, price just left straight away. Didn't even give the Asian range a chance to say goodbye to it or anything. It just completely left it. And then we dropped off, taking out stops here and here. I do want to expand this balanced price range, and you can see how we got to the 50% level of it almost perfectly. Look at that. And then we dropped. I do want to investigate this. Let's have a look. And then I'll quickly put in our sessions. Interesting, right? Interesting how we come to the 50% and then it rushes. Down to this level. It was in a rush to get there. That's quite interesting. Now, Friday's price action, it was pretty consolidated, understandably, after a week like that. You can see all we did was trail up. I wouldn't, after a London session like this, unless you got in, where would you get in realistically? I mean, it didn't even manage to reach a value gap. Yeah, I'm not gonna talk about Friday too much because there's not really any realistic options there. But what I was saying is, Friday, after a session like this in London, I wouldn't really want to be trading it, purely because you can even see like this kind of consolidation, you know, back and forth price action, and then obviously now we just entered Sunday, so I'm gonna leave that at that. So that's gonna bring us to the end of the video, guys. Thanks for watching. I hope you guys have learned something, and I'll catch you in the next backtesting video or in my daily reviews. You know how it goes. This has been GBP, baby, and I'll see you soon. Peace.